The market explodes higher Friday and takes out the October highs over the weekend. If you've been following this channel, you know this is not a surprise. This is Invest with Jacob. Okay guys, so in last week's video, we talked about our primary path being a pullback into support and then an explosive move higher taking out the B-wave high as well as the October high, and that's exactly what we saw. The market hit our support box and then moved higher, closing just shy of taking out the October highs and then taking them out in the overnights. So now the question is, are the bulls in control? And if so, how do they stay in control? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so when everybody else was screaming for the market to go lower, I was telling you that we should be seeing a pretty significant bounce here in an ABC, and that's exactly what we're seeing. And as you can see on the screen, our members are doing well because of it. If you're interested in knowing about that, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart of the S&P 500. And if you've been following the channel, you know our primary path has been 2 bullish paths higher, and then our secondary path has been a bearish path lower. And I've been telling you that the more immediate path lower is less likely, and it's becoming more less likely as we speak. And many of you have said, why would the market go higher? And the reason is the bears need the bulls and the bulls need the bears. After you've sold a market for so long, the bears get exhausted and there's no more sellers at those levels. So the bulls can easily step in, buy the market back up, squeeze the bears, have them close their positions, which forces more buys into the market, which forces a short squeeze. So when that happens, you get a bear market short squeeze or a bear market rally, which pushes the market higher. This creates more energy for the bears because now you get late buyers into the market. The bears can come in and really sell the market hard into those buyers and trap those buyers who are then forced to close their positions, create more energy in the down move, and push the market lower. So when you think the market's going to go down every day, we'd be at zero if that was the case. You have to have bounces, you have to have reversals, and you have to have squeezes in order to create the energy for the market to get new highs and new lows. The same principle works in reverse in bull markets. All right, so we're tracking 3 paths. Let's look at those paths. The primary path until proven otherwise, okay, is that we're tracking from down here. We're tracking an ABC path. So you got A, B, and we're in the C wave up that targets 39.17. That would just be an A wave of this A wave up here. So this C would complete an A wave, then you'd look for a B wave pullback, then another C wave up to this 4,000 region, and that would complete this A wave up. From there, we'd look for another B wave pullback, and then C up toward the August highs around 42 to 4,300. And then you'd look for a really nasty C wave down to the 2,500 to 2,900 area after that. So the ultimate conclusion of this move is a more bearish sell-off than we've seen almost at any time in this market, where we would go up to the 42, 4,300 range and then sell in a nasty C wave down to the 25, 2,900 range. So just because the market's going up doesn't mean that's bullish. All right, that's just the bullish perspective of this leg. All right, so that is the one path that we're tracking, that we're in an ABC, and the next target higher is the 39.17 1.0 fib, because ABCs, typically the A wave equals the C wave, so you measure your fibs out and you get 39.17 for this target. All right, so that's the target for this move up in the primary. For the secondary bullish count, that would mean the bulls are trying to take back control of the market. Okay, and it is possible, even in bad economic conditions, for the market to rally and actually be bullish. As crazy as that sounds, the Fed didn't start printing money until recently, and the Fed is not behind every move in the market. So the more bullish path is that we're tracking a 5-wave impulsive move, which is core to Elliott Wave principle, where you're moving up in a wave 1, down in a wave 2. This becomes wave 1 of 3. This is wave 2 of 3. Wave 3 of 3 targets the 38.76 area, maybe a little higher, up to 39.02. I'm sorry, 39.10. Then you look for another pullback to test the pivot, as long as it can hold above this high right here, this 37.77, and then come back up to 39.50 or so. Okay, that would be more bullish than the other path, even though it is not as direct. If that happens, we'd look for one more pullback into the 3,800 area and then a move up to 4,000. That's when I would start turning bullish if all of this played out. Okay, it's a lot for the bulls to do. They have their backs against the wall, but it is possible for that to happen. And in the overall big picture counts, it does look better with one more high in the market. So that is what we're tracking as an alternate count. Now, the bearish count that's more immediately to the downside, as I said, is becoming less likely. And that path would be that we're in an A, B, C up, okay? And then we're going to come straight back down in a wave 5 that takes out this low. Now, the problem I have with that is a few things. Number one, it really doesn't fit the bill because we've already broken the 382 at 37.58, and we're headed towards the 50% at 38.38. And that is not going to complete a very clean pattern here, and you don't see that very often. It's not impossible. It's not impossible to get a truncated C wave or something like that. But once you get over the 50% retrace, all right, it's very unlikely that it's a wave 4. So once we clear that 38.38 area, and I don't mean clear it by a penny, I mean clear it like get up to the 38.50 area or so. Once we clear this 38.38 area, this move down becomes very unlikely. You very rarely see a move over the 50% retrace in either direction and then see a move down come back to take out the low. So this pattern would be very incomplete in my opinion. Doesn't look right. The C wave's too short. And that is kind of the line in the sand for that move down. So to me, this path is very unlikely, but until they break 38.38 and prove it, we have to keep it in the back of our minds so that we're not trapped or caught off guard if we see a strong reversal at that level or just under it. All right. So that is the bearish count. We saw the two bullish counts. Hopefully you understand why we can be bullish in a bear market. And let's look at the NASDAQ. Okay, on the NASDAQ, as you can imagine, very similar counts. Our primary is the A, B, C up towards 11,879. That is our target for this move up. Then we would look for a B wave down. Then another C wave up, okay, and wave A. That would take us up to the 12,800 region. Then we'd look for a B wave back from there, and then a C wave up toward the August highs around 13,600. And from there, we'd look for a nasty sell-off, okay, back down toward the 7,000 to 6,000 region on the NASDAQ. So should this play out on both the ES and the NASDAQ, this particular pattern, the sell-off will be pretty nasty and pretty aggressive. And so we should keep our eyes out for that and be ready for that. So that's the primary. All right, we're looking for first our 11,879 target. And then we look for a pullback, then a move up towards 12.8, then another pullback, and then a move up towards that 13.6 area. Okay, for the secondary, more bullish count, you have, okay, same as on the ES, you have wave 1 up, wave 2 down, wave 1 of 3, wave 2 of 3. Wave 3 of 3 would target 11,691. Then you'd look for a pullback that holds this high, okay? And then you'd look for a move up towards the 11,987 area, and one more pullback and a move up towards 12,283. Again, it's a lot for the bulls to do. Their backs are against the wall. They have to prove it before I will acknowledge that that's the count, but that is a possibility, and it's something we need to keep our eye on so that if it does happen, we're prepared for it and ready to trade it. For the more bearish count, again, becoming much less likely, you would get the A, B, C up, and then you would get that wave 5 down, okay, toward the 9,000 to 9,500 area. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans and they both come with a 7-day free trial because I want you to get in there, make sure you love it, make sure it's for you, and you become part of our trading team before you ever spend any money. You can cancel at any time. All right, in our first room, the Invest with Jacob room, you get all of our real-time market updates, all of our buy and sell alerts, as well as all of your Elliott Wave questions answered. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's based on how he structures the trade. It's something you kind of have to see to understand, which is another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account, averaging 3 to 4% gains per week in there. Guys, we'd love to have you in these rooms so we can make some money together. All right, guys, key takeaways for today. We're looking for a strong move up from the bulls, either to the 39.17 area or possibly to the 38.76 area where we'd see a pullback and then another move higher in the more bullish count. If they can keep it under 38.38, they do have a bearish play down towards the 32.50 to 34.50 areas. But again, that's becoming less likely, and a move over 38.38 makes that pretty unlikely. Over on the NASDAQ, same type of deal. We're looking for a strong move up toward the 11,879 area as our primary count, or potentially up to 11,691 with a pullback from there, and then a strong move higher up towards the 11,987 area, which would be the more bullish count. All right. If they can't hold that and we move lower, then they are targeting the 9,000 to 9,500 area. Guys, that is the market update for today. I will talk to you tomorrow.